Warren Buffett and Charlie Munger are two of the most infamous and successful value investors of all time. But that doesn't mean you should listen to everything they have to say. Today, I'm going to explain why you should ignore their advice about real estate. We're going to do this by first watching this clip about Charlie and Warren telling everybody what they think about investing in real estate.
I had a question about real estate. And I know this question was asked in previous shareholder meetings about how come Berkshire doesn't invest in real estate? And I believe the answer was that we like operating business. So I want to make my question a little bit more specific towards commercial real estate. So considering the characteristics of larger size commercial real estate investments like REITs that can have the behavior and financial returns of an operating business, why not invest in real estate? Is it because you just don't like the returns, or the business is just not attractive?
Yeah, well, Charlie got a start in real estate, right, Charlie?
Yeah, I would say number one, that in a corporation like Berkshire that's taxable under subchapter C of the Internal Revenue Code, owning real estate is grossly disadvantaged compared to owning it directly by individuals such as yourself. That's number one. And number two, investment real estate is having bubble valuation problems of its own right now. All my rich friends who own real estate are selling their worst properties, and they're getting bids that come in higher than their highest expectations, and people are competing to take these things off their hands. I do not find it exciting, and it certainly doesn't fit Berkshire.
In that video, Charlie directly says that he believes real estate is having bubble valuation problems. Is real estate in a bubble or having valuation problems? Let's investigate that bold claim. In a previous video, we highlighted that the American housing market is far cheaper than other markets, like our neighbors in Canada. Home prices in Canada have greatly outpaced the growth of disposable income, but that's definitely not the case here in America. While we've seen rents continue to rise, home prices have continued to rise, and so have interest rates, that doesn't necessarily indicate a bubble. We still have a supply and demand basic problem. And when you look at what we're dealing with, it's really, really fundamental to the fact that while we don't like the prices, and they have increased a lot if you're buying a primary residence, we still see that the returns on investment for US-based real estate in the commercial sector is still very lucrative, even with all of the interest rate changes and the rent changes. Now, the second thing that Charlie Munger mentioned in this clip we played you before was the difference in how real estate investing is classified under Chapter C for big businesses like Berkshire Hathaway. To be clear, he's talking about a C corporation, which does have disadvantages for tax purposes in real estate. Investopedia explains that a C corp is a legal structure for a corporation in which the owners or shareholders are taxed separately from the entity. This can be very disadvantaging when you compare it to holding real estate in an LLC or an S corp. And to simplify that, Charlie was essentially saying that he doesn't get the best tax benefits for his big business, Berkshire Hathaway, by buying real estate. And this is probably true. Now, to be fair, Charlie has had to worry about how big businesses like Berkshire Hathaway are taxed differently under Chapter C of the Internal Revenue Service Code. After all, he was the vice chairman of an investment company under a C Corp structure. However, this does not affect the everyday investor like you and I. See, real estate is a highly beneficial investment for a vast majority of individuals, or mom and pop investors like yourself. And it's pretty obvious that real estate can provide you with both capital appreciation and passive income. But a lesser known benefit by many is the tax benefits that can be provided by real estate. See, real estate offers several different tax benefits that can reduce an investor's tax burden. These benefits are depreciation deductions, mortgage interest deductions, and tax deferral on capital gains at the sale. These are all clearly tangible benefits provided to you by owning real estate. Now again, this is not financial advice, but these are all things you should look into for your own specific situation. In my situation, I use all of these, depreciation and tax benefits and deferral, like this. We recently purchased a building. It appreciated quite substantially in value. We sold the asset. Instead of deferring it through a 1031 exchange, we invested in an opportunity zone which deferred taxes until 2026. It also gives us tax advantages when we sell the building in 10 years that we're now working on to improve, because we have invested based on what they're asking for from an opportunity zone tax situation. Now, another common objection Warren Buffett and Charlie Munger have towards real estate is the fact that they don't have a competitive advantage in the market. That is probably due to the fact that the real estate market is significantly harder to manipulate. Unlike certain stocks or industries that Berkshire Hathaway may be looking at accumulating large positions in. To illustrate this point, let's consider the fact that there are 58,000 companies and Berkshire Hathaway is the 11th largest company in the world. They are able to use their enormous cash balance to significantly expose mispricing in the stock market due to their overwhelming size. We can see here that Berkshire Hathaway holds more cash than any other company in the world, with more than $157 billion on its balance sheet. Berkshire Hathaway simply has a significant advantage due to their sheer size. That's definitely not the case in the real estate market in the United States, which is over 40 trillion in size. This is more than 10 times the size of Berkshire Hathaway. Investing in a market as large as real estate is great for small investors who are looking to avoid any potential volatility that some larger players can create through manipulating the markets for a better price entry or exit position. I can also understand why Charlie Munger and Warren Buffett have a general disliking for real estate when this is the case. But we need to understand Warren and Charlie's personal position before we listen to their advice on real estate as an investment. And honestly, unless you run a $700 billion business, should you really listen to any of their advice regarding real estate? Even the most successful investors have their shortcomings, or at the minimum, have strategies to get to the goals that are not really everyone's goals. So while they may or may not be right that real estate is not the best investment for them, they are not right that real estate is not the best investment for most individuals that don't have billions of dollars. Now let's be clear. This video wasn't to bash Warren and the late Charlie Munger. They are both great at buying cheap companies and at stock picking. And I agree with them because they like to hold their assets long term, which is something we like to do in real estate. But this video was supposed to highlight the fact that you want to be listening to people who have similar goals to the ones you want to personally achieve. If you want to get rich buying real estate, you need to be listening to people who have expertise in that area. If you want to learn about why real estate investing should be the best decision you can possibly make for your 2024, make sure you watch our recent video on that topic. I will put a link to that video on screen right here. Let me know in the comments down below what you think the markets will do next. And if you like this video, make sure you subscribe to our channel for more. I'll see you in the next video.